Thanks very much, Amber. Welcome, ladies and gentlemen, to Unstoppable, the Next Gen ATM Wave of Innovation webinar. Thanks to Amber and Claire for organizing this event so well. Yesterday was my honor to announce on social media, for example, in the accounts Forever ATMs, that the race to install the world's first Next Gen ATM is officially open. We see this happening next year or the year after. I'd like to thank our Next Gen ATM champions, including the most recent champion, Hayusung. And my last slide will show the logos of all our Next Gen ATM champions. We're very grateful to them. I'd like to share the structure of the webinar. And first of all, to thank you for being with us today. And to thank our speakers too. They are all thought leaders in our industry in different ways in different countries, and we appreciate their willingness to share their insights and their foresight with you today. First up after my global update will be Donna Embry. She is the Senior Vice President for Global Payment Strategy for Evolve Bank and Trust. Then Brent Gamble of Diebold Nixdorf, the Senior Product Manager, will be next up, followed by Marcel Ficken, who is the Next Gen ATM Consultant from Result XL 2020. Fourthly, Andrew Martin, CEO of Retail Banking Consulting Group, will continue the webinar. And finally, last but not least, Andrew Dean, the Executive Director for ATMIA for Africa, India, and the Middle East, will conclude the presentations. After that, there'll be a Q&A, so please record your questions on the question section of the dashboard, and we'd be happy to try and answer them. If we run out of time, you will receive a link to the recording, as well as contact details of the speakers to send follow-up questions to them. Let's begin straight away with my global update. To kick off this webinar called Unstoppable. So if you look at my agenda, I've just got 4 sections. Firstly, what drives innovation? Secondly, I'll give you a project update. Thirdly, we'll look at the business case for Next Gen. And then finally, I'll give some forecasts and expectations for the period 2020 to 2025 window. Next slide, please. Ladies and gentlemen, let's begin by looking at what drives innovation. Next slide, please. And this plaque from Barclays Bank is where the first ATM was installed in the world 52 years ago, 27th of June, 1967. And where the arrow points is one of the drivers of innovation. Lives made much easier. That is what technology tries to do, and I think Barclays Bank really nailed the purpose of ATMs, is to make life easier for people to bank 24/7. Next slide, please. The next slide shows that one of the drivers of innovation is a survivalist instinct to avoid becoming obsolete. Now we see here a picture of some obsolete technologies, although the one in the center, I do confess that I'm a co-conspirator with this revival in vinyl records. So vinyl records are not dead yet, but certainly they have been superseded by CDs and online streaming. And one of the drivers of innovation, as I say, is to avoid becoming obsolete. Next slide, please. We can see how easy it is to become obsolete, and we can also see from this slide how ATMs have evolved from their beginnings to today, not to mention the evolution of fashion styles as well. Next slide, please. Let's look at obsolescence. It really means becoming irrelevant. So the opposite is to stay relevant. And that means to stay appropriate if you look at those synonyms of relevance at the bottom of the slide, it gives you an idea of what we mean by staying relevant. It really means to be connected to and to be in harmony with today's world. Next slide, please. Another driver of innovation is hidden in this cartoon. You see that the ATM machine has kind of insulted the customer with laugh out loud when she wants to draw some cash from her account. And this is the whole point behind the NextGen project, is to enhance customer experience at ATMs. You know, we will integrate with the mobile phone, and it's going to be much more fun transacting at ATMs with your mobile phone instead of scratching around for a card and maybe getting your card skimmed in the process. But here, the customer is really at the core of this, and it's part of the design of next-gen ATM architecture, which Marcel will explain, is that we want the banks and the independent deployers to own the customer experience. Next slide, please. This next slide shows that the desire or demand really to improve customer experience is very high on the agenda in our industry. This is a poll, audience poll, taken at our recent US conference earlier this year, and you can see that just over 60% of the audience said that next-gen ATMs means to them improved consumer experience. Next slide, please. So those are some of the drivers, but always remember the survivalist instinct to avoid becoming obsolete. Let's give a project update and go to the next slide, please. We're talking about becoming unstoppable in terms of this project to produce next-gen ATMs. And this momentum is building up. We started, well, long before 2017, but the official industry RFI was issued in January 2017. It was sent to all the vendors around the world and gave them feedback from March. We got incredible feedback from the vendors, and it showed a clear global consensus in our industry between banks and vendors to go ahead with next-gen architecture. And next slide, please. And this gave us the confidence to develop a blueprint, which, as I say, Marcel will talk about in more detail. And it is geared towards this customer experience that I've mentioned already as one of the important drivers. Actually, 2 more companies have joined the movement, so we're now at 265 organizations across the world supporting this blueprint. And these companies span all the sectors of the industry. We're now at a very technical stage, and you'll see from those committees there that those are the committees that are driving forward the specifications, the standards, the security standards, the customer interface specifications. All of that is happening right now in those committees, and I issue an invitation to everyone on the call to join any of those committees on that slide if you want to get involved in the technical side of implementing the blueprint. Next slide, please. And here is the blueprint itself, version 1.5. It has evolved. It looks very complicated, and I recommend that you go to the portal, the NextGen portal, and study and download this blueprint. It's got 3 layers. I'm not spending any time on it because our technical advisor will be doing that in a subsequent presentation. But I'd like you to familiarize yourself with this blueprint, and I believe that is the blueprint of the future for our industry. We can be very proud of it because I don't know many industries that have a blueprint for their future. Next slide, please. But of course, when you produce a whole new architecture, a whole new ecosystem, you need new best practices, new standards, new specifications. And we have already started the work of preparing our industry for this new ecosystem. And we have, for example, before you, the best practices for customer security education when the ATM becomes integrated with the mobile phone. We're already ready for that, and we want to build security into the new architecture from day one, because we believe security enables trust, and trust is an important dimension of that customer experience that we've been talking about. Next slide, please. Let's just explain what we're doing right now. I've mentioned the committees, the technical committees that you're welcome to join, but we're busy with the implementation guide. It's one thing to have a blueprint, but how do you implement it? Well, you need standards, you need specifications to be defined, agreed upon, signed off. And Marcel is the technical advisor who's collating all of the feedback and all of the changes to the implementation guide. And we're progressing very nicely with that process. And that is the focus this year. If you want to know what is a Next Gen ATM, it's an app-based ATM. And there's a whole architecture behind it, of course, and that is what we are busy defining. Next slide, please. As we do that, ladies and gentlemen, we will take into account existing industry standards and standard bodies such as CEN XFS. And we are very interested in XFS4 IoT, the evolving new standard, because it's also vendor agnostic. And we want to aim to be vendor agnostic in the architecture. For example, there'll be a low-level and high-level API, and there'll be a standard there, which we must agree upon. There'll be standardized functionalities. But of course, there's a lot of scope for banks and independent deployers and service providers to innovate in the space. There's flexibility built into this architecture, as well as striving to be interoperable. Okay, next slide, please, Amber. We move now to the business case. What's in it for you? What will be your ROI if you invest in next-gen architecture? What is the business case? Next slide, please. So really, there is a business case toolkit, and I'd like to thank Leland Engelbart for his brilliant work in producing this matrix or toolkit, which allows you to use a spreadsheet and plug in your numbers, and it will quantify whether you're depending on your sector, it'll quantify for you what are the potential gains in moving to next-gen architecture. It identifies 44 elements where we can improve business, so either through cost savings or revenue increases. And it quantifies it based on a spreadsheet. So please look at that toolkit. It defines the business case in a very practical way through those calculations. But basically, it's all about staying relevant, saving costs, becoming more interoperable, having higher transactions because the consumer is more connected to the ATM, and just generally, as I say, increasing the relevance and usage of ATMs. But to find out what's in it for you, please use the business case toolkit. Next slide, please. And really, it's a toolkit that you get your answers very quickly. You plug in your numbers, depending whether you're a bank, a manufacturer, or an independent deployer, and the spreadsheet produces the numbers for you. This will help you to budget and calculate what investment you want to make. Once you realize, hey, this is a good business case, the whole industry is going to be migrating anyway over the next few years, let's invest in the future as well. And as it says at the bottom of the slide, what is your payback time frame? That's what we all want to know when we make investments like this. Next slide, please. So what I'm saying now, ladies and gentlemen, is that because support for Windows 7 is ending in January, and also support for Windows CE is ending in 2023, we face 5 years or more of migrations anyway. To Windows 10, we're also looking at Linux, the Linux hypervisor option as well, in this time of migration, and help our industry to optimize the migration and to strategize around it. And that document there is one of the ways how you can show how you can combine migrating to Windows 10 and migrating to Next Gen ATM architecture. Next slide, please. I just feel if we're migrating anyway, let's migrate it at the same time into the future so that we can build a platform for business and production for another generation. Next slide, please. As I come to the end of my presentation, just like to point out a few things that we expect to happen over the next few years. Bear in mind that, as this slide shows from our audience poll at the US conference, there is an appetite to invest in NextGen, and you can see there from the results that it's moving in a positive direction. We do have the appetite to look at a real investment, and we've got that toolkit to help you to do your calculations. And we all know from building, if you've got the architect's plan in front of you, you can build from it. You know where you're going, and the blueprint shows our industry where to go. Next slide, please. So just briefly, let's finish by saying we expect the online self-certification system to be completed in 2020. I'm talking to Marcel in September how to budget to get that done. So once that is available, it means next-gen ATMs, compliant next-gen ATMs can be produced. And we believe they will, as soon as the system is ready, we'll start to see next-gen compliant products being produced in major marketplaces around the world. We'll see investments picking up in this new architecture because you'll see the compelling business case. And then I believe the media and the public will become more interested, and then the positive consumer experience that's created by the new architecture will generate a great buzz. We believe in the 2020 to 2025 period, banks will see next-gen ATM architecture as part of their strategic planning. And that by mid-decade, next-gen ATMs will be an integral part of the global digital economy and the Internet of Things, with tens of thousands of next-gen ready ATMs installed and more on order. Ladies and gentlemen, thank you very much. We go to the next slide, and then I'm delighted to hand over to Donna Embry. Donna, over to you. Thank you very much.
Thank you, Mike. Amber, if we could go to the next slide. What I'm going to do is take a very brief overview. I kind of call this the speed dating preamble to what the rest of the speakers will drill down into. What I want to talk about is give you some positioning statements, some thoughts to set the stage for how to think through the details that you'll hear from our other speakers, and some salient points to take away from this sort of outline overview of what we're going to drill down into with the next speakers. So I'll talk briefly about the evolution of ATM changes, why Next Gen, why there is no disintermediation on the horizon, some opportunities, as well as how you can get involved in the next steps. This message is primarily to the independent ATM deployers, operators, owners, the smaller financial institutions that may be trying to think how this affects you, or how you can utilize the information that you're going to be presented with today. Next slide, please. So where are some of the evolution of ATM changes? I think we've been in for the past 10 years, just the era of legislative compliance initiatives that basically involved hardware and technology, as we all looked at the Triple DES initiatives, the American with Disabilities Act initiatives, EMV, and up to today's Windows migration, that basically was technology and hardware upgrades that didn't really position us for any sort of revenue growth. And so when I was trying to look at a quote that would kind of sum this up and say, okay, where from here, the best thing I could think of was lyrics from the Beatles song Help, which basically the industry would be saying, help, I need somebody, not just anybody, what do we do? And I think that became the genesis of the Next Gen ATM project. Next slide, please. So why Next Gen, and what does Next Gen provide to the industry? I really believe that this is not just technology, but technology with an evolutionary promise, a promise to open up the industry for more innovation, for rapid growth, for rapid new product implementation. Because as I'll talk about in a future slide, there is no lack of product opportunities, but there is a lack of the ability to be able to implement those opportunities in such a way that keeps us agile. The nice thing about the Next Gen project is that it's not a fire hose mentality. It's not, you have to take it all and eat the elephant in one big bite. This has been presented as sort of a superhighway, and with a gradual migration of what fits you and what fits your business, so that you will have the ability to do sort of an on-off ramp. You come on when it fits your needs and business, and then you're able to go off and let technology and the evolution continue in the development of new technology. I really call this an evolution with a revolution, revolutionizing the business, keeping us relevant, and keeping us agile. And agility is the key driver of all of this. So my quote for this would be from Seth Godin, who wrote a very popular book called The Purple Cow, that evolution is the most popular way that we have to deal with change. And I think this is an evolution in our industry. Next slide, please. So I did want to take some high salient points from a document that was just produced from the Cash Product Office of the Federal Reserve. It's the 2019 findings from the Diary of Payment Choice. And what it basically said is that cash is still very relevant. Cash is the second most used payment instrument, and these are high-level points. You can drill down if you wanted to go to the website of the Federal Reserve to pull down the details. But what I think is important is to understand that consumers still use cash in 26% of transactions. 49% of those payments are under $10, 42% of the payments under $25, 10% are $25 and higher. But the biggest point here is that individuals aged 18 to 25, our millennials, are the highest users of cash with 34%. The next age group is actually those 65 and older that are about 32%, and then it drops down to the middle age group. But it's very important to understand that the younger generation, the millennials, are still very much purveyors of cash. Next slide, please. So what are the opportunities? What are the markets that are ripe for these new cash opportunities for us to think about? I divided it into three primary areas. One, the underbanked and unbanked. And there was a report on the economic well-being in the U.S. households in 2018 that was published in May of 2019 from the Federal Reserve that basically said we have 50 million U.S. adults that are unbanked or underbanked, and that 91% of that population have mobile phones. which is important to the evolution of the Next Gen ATM projects. Now, the products that they use primarily are bill pay, check cashing, paycheck advances, tax refund advances, payday loans, all products that are portable to either kiosk or cash out at ATMs. So we really need to capitalize on this opportunity that's out there. Another area market opportunity is this gig economy. For those of you that are not familiar with the definition of a gig economy, it's markets that basically are short-term freelance workers rather than those with permanent jobs, and they can range anywhere from accountants to service areas to HR, outsourcing, all sorts of opportunities. Some of the opportunities that I see there are real-time cash payments to like an Uber driver or a Lyft driver, those that get paid by the ride that want to be able to draw out their cash. Some of these other businesses that might want to do person-to-person payments or person-to-business payments or even business-to-business payments where you could utilize the kiosk or ATMs to be able to facilitate these transactions. And third, looking at the lifestyle changes of consumers. There have been pockets of cardless transactions where we see mobile phones replacing cards in the future. We know that consumers, and especially the unbanked consumers that have the mobile phones and the proliferation of mobile phones, where everybody has their phone but may not want to carry their card. How we can capitalize on that. Plus how we can capitalize on the location. And I think location. It's very important as we look at the banking industry where there are branch closures and looking at how that these banks still continue to service their consumers and their customers in the same way that they've always been able to service them without making them drive particularly to a branch. So how do we open up that market and turn on financial services where you live? And when I say where you live, I don't mean at your house, but how you're living, how you're moving, how you're mobile, what you're doing. This goes back to the quote that Mike mentioned on the first ATM, where we do need to use these machines to make lives made much easier. Next slide, please. Ember? Okay. So how do you join this next gen revolution? A couple points. Mike mentioned the number of committees on slide 14. When this is posted, you can look at those committees, and you can join those committees and get engaged and involved. Second of all, for the IADs, the owners and operators, we have put together what we call the Next Gen IAD focus group to help operators, small banks can join this as well, be able to talk about how it affects them and how they can get involved and get on this on-off ramp. If you're interested in that, you could email David Tente at david.tente@atm.com. Our first call is actually this Monday, but we know that that we'll have plenty of work to do, and you can join at any time. So I want to leave you before I turn it over with a final quote, and this is from an article from Dave Kirpin of Inc. magazine. You can choose to change with the times, take advantage of new opportunities, and grow your business, or you can do nothing and watch your business erode. I now want to turn it over to Brent Gamble. Thank you.
All right, thank you, Donna. Next slide, please. In a recent global survey, only 3% of consumers use just one of their channels their financial institution offers. And increasingly, as the younger generation takes over, the use of channels among them is increasing. Boomers and Xers typically use just a couple of channels they are familiar with. and they consistently use them. But millennials are changing the game. The average millennial interfaces with their financial institution across multiple channels, and they expect a similar customer and consumer experience as they use them. And this currently drives the engine of change that we're seeing. So what we're seeing is the financial services industry, as a response to this, is on a journey of unprecedented transformation. As physical and digital channels and experiences converge to meet the expectation of millennials, the increasing push of technology is driving consumers of all ages to become increasingly tech savvy. Their needs and expectations are shifting radically in all demographics. Technological innovations are advancing more rapidly than ever before, yet many financial institutions continue to be hampered by legacy network limitations or core system infrastructure or back office messes, etc. So at the center of this journey is really an essential truth. Changes in consumer preferences and behaviors have driven the fusion of transactional banking and relationship banking. I don't think we will ever again be able to truly extract these from one another. In our modern digitally driven banking ecosystem, transactional interactions don't supersede relationships. They actually create and nurture them. In another recent global survey, 57% of respondents said that improving customer experience was the most critical change their organization needs to make at the self-service channel. Future-proofing the consumer experience requires all of us to build open, flexible pathways between channels so every transaction becomes seamless, efficient, perhaps even delightful. Advanced self-service capabilities and increased automation are requirements simply to keep up with these evolving demands. Next slide, please. So we have to evolve, and we are evolving, but we have to use our existing channels in new and innovative ways to meet these demands. Today's self-service terminals can do so much more than the old cash and dash routine that we're used to. So ask yourself, are you using this highly capable channel to its full potential today? Because the truth is, consumers really do have an appetite for advanced functionality at the ATM. With today's modern software, you have the opportunity to deliver enhanced, complex transactions to consumers through the self-service channel by leveraging things such as the existing Brent systems to decrease the cost of your transaction and increasing your traditional teller's ability to better serve other customers. And this is a pattern we're seeing over and over again across the globe in various markets and various forms. What it ultimately lends itself to is the channel is now blending. We're no longer talking multi-channel or omni-channel. Instead, we're talking channel-less. Let me derive some examples from my portfolio here at Diebold Nixdorf. Using dynamic transaction automation, a consumer initiates their desired transaction, be it payments, split deposits, check cashing, etc. And this transaction is conducted at the terminal and sent to the core system instead of the ATM rail for host processing, all through automatic and instant account access through our dynamic solution. Teller is basically becoming self-service. And still, there's more. To add other variables into the equation, today's consumers expect speed and simplicity, regardless of the channel they choose to conduct the transaction on. They want easy but secure access to cash without barriers and extra steps. So for some, a new way to meet these expectations is by taking the physical card out of the transaction completely and empowering people to pre-stage their transactions via mobile or digital channels. So again, using our dynamic transaction automation, consumers can use their mobile banking app to schedule an amount to withdraw, or they can pre-arrange an amount to send to someone else, or they can pre-stage a deposit. All that to save extra screens, extra steps at the ATM, and really just improve the experience by enabling mobile at the ATM to decrease the overall time. So our solution, this issues a one-time PIN to be used at your terminal, no card necessary. Once at the ATM, the transaction can be processed using either the core or the standard ATM rails, depending on who you partnered with, how your solution is set up. So not only is this experience faster and more efficient, it provides your consumers with greater security. So some of us, if you are pushing the needle on your self-service terminals, great. And you push the throttle, engage your staff and your vendors to think outside the box and chase opportunities. Influence the innovation. Be the driver of this change. But for, unfortunately, a lot of us in the industry, the needle hasn't moved a whole bunch in recent years, and there's still a lot of questions on how to leverage the ATM channel to further potential. Next slide, please. So then, how do we get there? I like to think along the terms of APIs, or application programming interfaces. At Diebold Nixdorf, we have been building solutions for years that have both a front-end software at the ATM, as well as some back-office enterprise software connected to it. With our new dynamic portfolio, we're down to 3 core sets of APIs between our ATM software, typically referred to as dynamic connection points, and the other, often cloud-hosted, dynamic software. These APIs encompass transaction handling, operations, and value add. As you saw in the ATMIA NextGen blueprint some minutes ago, these are the exact same categories proposed in the blueprint. So through our transaction processing API, we're able to move single or groups of complete transactions to authenticate and authorize through our dynamic transaction engine product. The API provides flexibility for various authentication methods, and then on the back end, we have an extensible API that allows the same dynamic product to communicate directly to your core banking or other business solutions. Of course, I'm talking a lot about my software here at Diebold Nixdorf, but only for example. I'm really drawing this to paint the picture that APIs are driving some really cool things in our industry. But all too often, we face closed source, closed specification, vendor-specific, intellectual property challenges, and other lock-in. Take, for example, the ubiquitous FEN XFS, which most of us are familiar with. Designed to allow multi-vendor flexibility, many have modified, extended, or selectively chosen pieces to implement or change in a vendor-specific way to provide additional value around the standardization layer. And with our dynamic software and the APIs I was just mentioning, unfortunately, these two are proprietary and specific to our solutions. Yes, they are documented. Yes, they are running with customers that have either their own software or another vendor, but really this has not been our standard approach. What ATMIA is doing here with the next generation of ATMs and the blueprint is they are driving standardization in our industry for the next best thing. Flexible apps, cloud-focused architecture, improved consumer experience, and interoperability, all to enable more value for your ATM, for your other channels, and more importantly, for your customers. This is where the industry has been going, and it's going there faster and faster every day, and we're happy to be a partner with ATMIA to build this technology according to the blueprint and to be an enabler of this exciting change occurring in our industry. So with that, I'll hand over to Marcel.
Thank you, Brent. Next slide, please. I will talk about the NextGen Blueprint 2019, like Mike said, the progress of the NextGen ATM implementation guide, and a quick scan model of steps for companies to start their own NextGen ATM journey. Next slide, please. I will explain the NextGen ATM Blueprint 2019 architecture basics in the next slides, and you can watch the full video clip on the NextGen ATM webpage, which will be also sent by the email of Embry later at the end of the webinar. Next slide, please. The blueprint contains of 3 layers. The first layer is the endpoint devices layer for the ATM and the customer-owned devices, the COD. The second layer is the app service layer, providing the services to the endpoint devices, and the third layer. And the third layer itself is the infra layer of the ATM deployer with the ATM channel services. Next slide, please. The layer 1 is the endpoint devices layer is designed to leverage on the current mobile app development technologies for the same app consumer experience on the ATM as on the mobile phone. The NextGen architecture blueprint support customer-owned devices like the mobile phone, but contactless and cardless solutions too. The ATM endpoint device will contain of appliance-specific hardware and software shown in the color orange. It can contain provider-specific multi-vendor software and other software shown in gray, and deployer-specific user interface apps shown in green, which are connected through standard provider-agnostic APIs in blue, like JavaScript and XFS standards. Next slide, please. The App Service Layer 2 is designed to leverage on cloud-based technologies using app and open API models. There's a level playing field of provider-agnostic app services in blue, like, for example, test and certification services, provider-specific app services in gray, and appliance-specific services in orange. Next slide, please. The Layer 3 infrastructure is designed to leverage on the cloud-based technologies and the open API models. There are provider-agnostic services in blue, like the payment network gateways to the international schemes, and more deployer-specific services in green. Next slide, please. Now, these are the basics of the architecture, so now you have a better understanding of the complex picture. This is the NextGen ATM Blueprint 2019 version 1.5 public draft, which has been produced by the Architecture Review in the second quarter of this year and submitted to the Standards and Technical and Governance Committee of the Consortium for the NextGen ATM for discussion and approval. Public comments are still welcome till end of September 2019. Feedback is welcome from both within the industry and also from the general public. Next slide, please. The Blueprint 2019 contains two basic endpoint device layer and two types of ATM configurations. On the left side, first is a high-level ATM configuration, which connecting the deployer-specific ATM apps in green directly to the ATM appliance provider-specific hardware and software in orange. Next slide, please. And the other, the second configuration example is a multi-vendor software ATM configuration, which is here on the right, which leverage on the current de facto multi-vendor software in gray and current ATM appliances in orange using the low-level XFS or in the future XFS for IoT standard to connect to the same high-level deployer-specific ATM apps in green. Next slide, please. The second topic is the progress status of the implementation guide. Next slide, please. The NextGen implementation guide is based on the latest NextGen architecture blueprint and created by the Functional, Technical and Certification Workgroup on the supervision of the Standards, Technical and Governance Committee. We're following an agile way of working, which means a single app functionality. Currently, we have the cash withdrawal for contact cards, contactless cards and cardless in version 0.5. and an end-to-end vendor agnostic API of the next generation architecture flow on all the three blueprint layers. We just released version 0.5 draft of the NextGen implementation guide, and we're starting cycle 6 based on the public consulted ATM blueprint 2019. You can still join the ATMIA NextGen committees and or the implementation guide functional, technical or certification working groups too, or be a front-runner vendor providing proof of concept feedbacks like is shown in the agile way of working in the picture below. Next slide, please. My last topic is the quick scan model of the steps for companies to start their NextGen ATM journey. Next slide, please. How can your company become NextGen ATM ready? One way is using our developed quick scan model, which consists of the following 6 steps. The first step is the NextGen ATM documents from ATMIA, such as the blueprint, business case matrix, implementation guide, and of course your own company ATM channel documents, which will be used as critical input for this quick scan. The second step is the target operating model, to define and understand how does your NextGen ATM target operating model look like based on step 1, of course, of the documents in the blueprint. The third step is to integrate the NextGen ATM blueprint into your company's blueprint. The fourth step is which bundling projects will provide you the first implementation towards NextGen ATM based on your roadmap as a company. The two most common bundling projects are the OS migration to Windows 10, including hypervisor and contactless support, what I see at the moment. And the next quick scan step is step 5, is how much can NextGen ATM contribute to these bundling project business cases using the ATMIA business case matrix components to improve your bundling business case. Next slide, please. The ATMIA NextGen ATM economic matrix contains, like Mike earlier said, 21 ways to improve your revenue and 22 ways to lower your cost to support your NextGen ATM investment decision and improve your NextGen ATM bundling project business case of the quick scan step 5. Last slide, please. All these 5 steps and the results will be the output of this quick scan and written in the NextGen ATM quick scan report at step 6, which will guide you, your company, and your ATM channel projects to provide the direction to become NextGen ATM ready. If you want the NextGen ATM quick scan report or need additional NextGen expertise, please have a look at the Result Excel 2020 ATMIA showroom or contact me or one of the other ATMIA approved consultants at the ATMIA consultancy page. I will now hand it over to Andrew Martin. Thank you for your attention.
Afternoon, everybody. This afternoon, obviously, we're all very excited by the NextGen, and I wanted to take you through how we are seeing it with some of our European projects, and how we're implementing already some new concepts that will fit within the next generation. If we pop to the first slide, please. Obviously, we're all aware of cash in society. Cash in society, yes, it's declining. In certain countries, it's declining at large rates. In some countries, it's declining at smaller rates. I think the fact is cash is declining. It's still positive. But our view is that ATMs should be viewed not in the number of cash transactions, but in the number of transactions that go through the devices. If we can go to the next slide, please. Because one of the paradigms that we're seeing is that ATMs seem to be not being included in the digitalization. If we go to the next slide. As you know, cash is on the decline. We see digitalization coming through in all areas of our life. And as Mike said at the very first slide with the Barclays sign, the whole objective of ATMs was to make life simple. We see people embracing smartphones, tablets, laptops. You know, people are talking about mind chips for the future to drive devices. But why are people not viewing ATMs in the same technology bracket? At the end of the day, an ATM is a computer on top of a safe. And we should be embracing that and taking on new functionality as part of the digital revolution. From our side of the European market, and now we're seeing it in North America and in Asia, we're seeing ATMs are quickly becoming ABMs, automatic banking machines, where we can embrace transactions, we can do deposits at devices, we can enable transactions through our smartphones. You know, one of the key trends we're starting, or pressures we're starting to see in the market, is the pressure on plastic. We're starting to see plastic being replaced by our smartphones. So the next generation is a fundamental step forward, where we'll see the combining of the other technologies like smartphones with the devices. We currently are engaged in some very exciting projects in Europe, where we're looking at the smartphone can effectively pre-stage all of your transactions, and then you finally do the final piece of the transaction at the ATM. You can receive funds, you can transfer funds. We have one project, which is an API-based project with ATMs that is looking at combining the passport facial recognition in Europe, whereby a user can go to the ATM, they will identify themselves through their facial features, then they will have a second authentication, and then they'll be able to link straight into some of the money transfer organizations that are available today. So they're then able to immediately either collect funds or to transfer funds to their family, friends, or whoever. If we go to the next slide, please. So I think we're starting to see that the definition of ATM is exploding. We're seeing in retail environments, as we see here, yes, we still have a need for cash, and it varies in every country, but the cash can be linked to so much more. The device can be linked to your loyalty schemes. We're working with some retailers looking to connect devices to loyalty schemes so that people can check their balances, or even we're looking in some retailers that they can then print the coupons, initiate a transfer at their smartphone where they cash in so many points to get a coupon for some pasta or some wine. So it's really combining all of the technology channels, but we're still having the ATM at the center of the transaction. We're also being pressured now to, in some countries, when you get into the lower demographic areas where people are maybe on benefits or also having to pay for their utilities through top-up mechanisms, we're seeing a desire to automate that through the devices as well. So again, that would be an API connection to the utility vendors and allowing the device to receive the funds and to credit the relevant accounts. If we go to the next slide, please. As we said, we're starting to see ATMs moving in the immediate term en masse to become automated banking. We see initiatives in the UK, for example, where banks have consolidated and they now have unbranded branches where you can go into the branch. It's not branded any one specific brand, but the minute you put your you recognize yourself through your device or through your card, then the ATM takes on the brand of your bank, and then it opens up a whole spectrum of services from money deposit, transfer money, account transfers, really enabling banking services through the devices. But one of the key things is all of the architecture that's built into the next generation. It's all about open banking connectivity, about API connectivity. So it really is bringing the ATM into the digitalization of the banking services. And we don't only see this as an opportunity for the banks, we see this as a massive opportunity for independents as well, because banks are starting to reduce their branch networks. In a lot of countries, we see pressure in rural areas for financial services. It's a wonderful way for the ATMs or the ABMs to fill this void. So immediately we're seeing huge demand for embracing the next gen infrastructure to take on new services. Some of the exciting projects that we're engaged with, we're starting to look at, there's pressure in society to get prescriptions into the markets, maybe in 24 hours a day services. So there we're working on one project where you can go to the device, you recognize yourself through your smartphone or through a unique PIN number if you don't have a smartphone, and then the ATM will open up a locker that will allow you to take your prescription away. We're also seeing a demand in several countries for connecting devices to government payment channels. So you're able to get funds to people that need the funds, and it's not just they need it Monday to Friday, but they may need it 11 o'clock on a Saturday night or 12 o'clock on a Sunday night. So it's a mechanism that allows a token through tokenization to be issued to the individual that is then exchanged at the device for cash. Another exciting area is we're also starting to see ATMs being integrated into parcel collection or parcel shipping, so that you can go to the device, stage your transaction maybe on a smartphone or at the device itself, but you're then able to either deposit your parcel or to send it off. Again, it's similar to Amazon Locker, but it gives a far more detailed transaction for the end user. But it's all about the ATM becoming all part of these niche markets and part of financial services. Next slide, please. So we then, obviously, the ATM will become an ABM. We now see the ATMs moving towards becoming kiosks, where you're able to do video banking. You're able to have, continuing the internet connectivity. You're able to have a channel integration with the bank or with the service provider. By channel integration, we mean that the ATM is able to remind the user that, oh, last night you were online looking at an insurance policy. Do you wish to continue that transaction? Very much the way we see in the internet world, where you do a purchase online, or you start a purchase but don't finish it. If next time you go back to your web page, you're reminded that you have an open basket. So we start to see ATMs coming into this arena where they're able to actually communicate with the user to add value and to make their life easier. So this is all being driven by API connectivity in much the way that is driving the fintech world. As we said, we're looking at video support, and we're seeing a large demand for open banking, whereby you're able to go to a device, deposit funds, and that is instantly credited to your bank account, even if that device is not registered to that bank. So it's through the open banking communication. So we see a lot of opportunities and a lot of projects. I think in some areas we see challenges because the card schemes need to catch up and need to align. But we're starting to see the demand for the next generation functionality is really accelerating. Next slide, please. So really, that was my last point, was just how exciting it is at the moment in the market, where we're starting to see the next generation functionality and architecture actually starting to have traction and starting to drive user demand. Thank you very much.
Thank you. Next slide, please. So I'm going to talk through the role in emerging markets. My experience is Africa and Middle East, but we'll be talking about our experiences there and what we're seeing in terms of the evolving role of the ATM, and of course with a future-looking view in terms of how we see that role playing out over the next, say, 5 to 10 years. Next slide, please. So I think we've heard some of these themes, ATM as a substitute for the branch. I'll give some feedback on what we're seeing with some of the banks in Africa. Big drive, of course, still for financial inclusion. In certain countries, we have, the story of mobile in emerging markets, and of course in Africa is well known as an instrument for banking and for payments. And it's been a huge driver for the uptake of financial inclusion. Another interesting development in the emerging markets again is the role of banking agents, which have been used to quickly increase the uptake of those that are unbanked or underbanked to being more formally banked. And then of course, mobile being very dominant, mobile money being very dominant, mobile payments being very dominant. The big interplay between people moving from mobile, almost leapfrogging the other channels, first getting financially included through peer-to-peer payments or bill payments on their mobile phones, and then ironically later on acquiring a banking card and a full service banking account and transacting at a branch and at an ATM. So it's certain banks have a specific strategy to even grow their branch footprint for the reason of seeing that a high touch is important when dealing with recently financially included individuals. Next slide, please. Just a point I noticed that I just missed was the role of the IADs as well. Just to talk about that quickly, and policy within emerging markets. So IADs have been very successful in certain territories, but often that's a regulatory and a policy matter, that can hold back the wider deployment of ATMs. But we have seen that where IADs are present, it's been very successful in growing the footprint. Yes, examples of 2 banks. I'll just summarize this on the next slide very quickly. Is that on the trends we're seeing are typical global trends. They are, I suppose, they're just interesting to see by territory, but a rationalization on the branch and the call center and tele activities. You can see on average they're down by 13-14%. Mobile and digital volumes growing by 20-30%, but still growth on the ATM side of about between 5 to 10%. So when we talk about payments and uptake in Africa and Middle East, we're seeing growth across all channels, but of course that's also driven by economic growth, and it's also driven by still a big gap in terms of the financially excluded. Next slide, please. So the other 2 banks, Capitec Bank, the one on the right there, is one that has specifically, tried to work closer with the those that are excluded, and has a keen or deliberate strategy to have more physical and face-to-face contact. So it depends. I think the point I'm trying to make is it depends on the market. Mature markets or developed markets will be saying we're wanting to move everything digital. What we're seeing in emerging markets is that it's kind of a mixed match, and certain channels are growing more quickly, and it's not following the traditional path of everybody going to a branch and then all of a sudden everybody being digital. Because in some cases with the mobile uptake, it's leapfrogged the other channels and now reversing back because people want to give these newly included individuals full service to banking services. Next slide, please. So that bank just represents the three of the key strategies we're seeing, which are the ATM as a branch, really focusing on a full service center and rationalizing branch footprint. And only using that really for focusing on sales, and then of course the big focus on banking apps, and then also personal financial management and more lifestyle type of communities as the key strategies from a retail banking perspective. Next slide, please. You can go on. Thank you. So mobile money customers, I think. We can see that the percentages from GSMA, biggest uptake in Africa, 45.6%. Next slide, please. So mobile money, as I mentioned earlier, it's been a very useful mechanism to get those that were not involved in banking services or payment services at all into the ecosystem. And you can see there, sub-Saharan Africa in terms of US dollar value, 15% growth year on year from 2017 to 2018, and in Middle East a 25% growth. So good, healthy growth in mobile money. Next slide, please. Similarly, ATMs, you can see even on the ATM penetration levels. This was part of a study we did for Africa and Middle East on IADs. And looking at the ATM penetration level, so still lots of room for growth and still lots of expansion. There might be in the major cities, there might be some rationalization of estates, but there's so many areas that are underserviced that we're still seeing a lot of growth. Next slide, please. So here, these are just some graphs to give you some indication two countries here, Angola in terms of ATM install base and ATM withdrawal volumes, and Zambia in terms of ATM withdrawal volumes. And you can see that the growth curve is still pretty significant. And as somebody's getting financially included, what we're seeing is, even though they were included through a digital channel, i.e. mobile, they then start to get equipped with a card, start to use the ATM, start to use the point of sale machine, and slowly move into your traditional range of channels. Next slide, please. Cash use as well, cash growth. There's one anomaly in that slide, which is Angola, but that was because of a denomination change. But otherwise, next slide, please. You'll see that overall bank volume growth is increasing, and we see this whether it's bank note volume growth. We see this whether this is in terms of value or in terms of units per individual. So we did quite a thorough review of 6 selected African economies and seeing growth in cash volumes, but at the same time seeing growth in ATM transaction volumes, point of sale transaction volumes, and mobile and digital volumes. But it's an indication of an underserved market historically. Next slide, please. Next slide, please. So POS transactions, similarly, this is in United Arab Emirates. You'll see substantial growth. Next slide, please. And point of sale transactions, growth in Africa, Nigeria, which is our biggest country by population in Africa. And you can just see those growth rates are just phenomenal. And the reason I wanted to show this was to give you an indication of where we are on the curve of financial uptake. Huge growth in volume of ATM transactions. Well, moderate growth, I would say, of about 10%. Point of sale transactions, phenomenal growth. And then your cash still growing, and of course digital channels still growing as well. Next slide, please. So really, to look at what's going on in terms of the maturity within the ecosystem. Just to talk about that quickly in closing. Move to the next slide, please. So some of the use cases, and this is from a IBM cloud white paper in terms of API use cases, and this is what we are hearing from a lot of the banks in terms of what they're looking to deploy. I think even the card associations are also making noises about enabling additional functionality, and we've seen quite some innovative applications of these. And I think emerging markets are interesting to watch because of the diversity of the nature of the market, whether it's income levels or whether it's geographical or whether it's urban versus rural concentrations. Very interesting to see what's happening and some of the innovations that are coming out. We saw one at our Middle East conference, where very interesting how they are using personas or personality profiles or user profiles to customize the presentation on the ATM and give a screen format that's applicable to how they understand the user and whether they're more smartphone familiar and what type of touch screen and what type of services they're likely to interact with. Next slide, please. So trends, interestingly, we've seen growth in all channels. Card volumes increasing. We also, contactless is paving the way for mobile contactless, and with a lot of the adoption in Africa on mobile, that's going to be, we see that it to be a very quick uptake once mobile contactless is more pervasive. QR codes being very popular. Interbank peer-to-peer payments, a big drive for payments happening from bank apps. Mobile and online channels growing, but there are some issues with connectivity. So still quite a lot of feature phones around in our territories, and not everybody's equipped with a smartphone with 3G or better access. A branch is still serving as a deliberate intent for getting people into branch, educating them, and diversifying the range of services that they use. And then ATM sitting as a solid position there for, of course, deposit taking, as well as self-service as a branch substitute. And then in policy, still important. We've had some discussions with some of the policy makers around making sure that the feasibility for ATM deployment in rural areas where it's needed is sufficient, and that can drive the next wave of user-friendly interaction, including driven by biometric identification applications, as well as cardless transactions driven through mobile interface. And then last slide, really, you can go on to that with just some extracts of some of the examples of some initiatives happening in the region and internationally, giving some insight into some of the innovations that are happening. Thank you, Mike. Over back to you.
Thank you very much, Andrew. A great way to end the webinar, and I think, ladies and gentlemen, you've seen us open a window on the future for our industry. So a huge thanks to all our awesome speakers for their insights and foresight, to Amber and Claire for organizing this highly informative webinar, to all our Next Gen ATM champions, and for your support for this webinar. Donna had spoken about Next Gen ATMs being an evolution within a revolution. And Brent spoke about the new generation taking over, the millennials. And we're getting ready for that, to stay with them on their journey. Andrew spoke about the digital revolution and the definition of the ATM is exploding, and that the next generation is here already. So please support the Next Gen ATM project. Thanks for being part of this webinar. We wish you a great evening and rest of the week. Thank you very much. That concludes the webinar.